So we're going to move into preparing a contract now. So this is going to be predominantly Graham talking through this question, but essentially your agent can prepare a contract for you too. I mean, I do that on behalf of clients all the time.
Yeah, as I said before, basically try to give yourself as much time as you can to have these conversations that we've been talking about. And so you want to generally have a good due diligence clause, which gives you the ability to really look into anything that's relating to the property, to the land. And so some of the little things you want to be checking out is, are the survey pegs are they in the right locations? Are they there at all? Sometimes they're not, and it's not till later on that that's discovered. The due diligence period, as I said, talking to your financial advisors in terms of your brokers, in terms of being able to arrange funds. But generally, as I said, it's a straightforward process. We all use the same form of agreement for sale and purchase. It does have quite a lot of general conditions to it, so your lawyer will take you through those.
Right.
But other than that, normally you would provide for settlement somewhere between 3 to 5 weeks following confirmation of the agreement as being unconditional.
Okay, and just one more thing I wanted to touch on then is kind of the current market, because that actually does affect how you do draft your contract. At the moment, the market is reasonably competitive, and you wouldn't want a really long due diligence period to cause you missing out if you're up against another person offering on that particular section. So what is important to know is also to potentially try to do your due diligence prior to signing the contract as well, if you have the opportunity to do so. Sometimes it doesn't always work that way, but it can mean you're in a better position to secure the section that you want, especially because we do have a limited amount of land available at the moment.
That's a very good point there, Kate, because I've seen it way too often, is where people have actually found a section that they do like, and then they decide that they want to think about it a little bit longer. Graham's probably seen this a little bit as well. And they go away and they think for another couple of days, 5 days, 10 days, whatever it is, and then suddenly they ring whoever's acting on behalf of them, it brings them back up. Hey, look, I'd like to put an offer on that section. Sorry, but it's been taken already. My big one is to actually, if you like that section and you're probably 85 to 90% like it, put your hand on it straight away. And that's getting an offer put on the table, getting it accepted as soon as you can, and then do your due diligence for that period of time. And you can extend it if you need to. Do your maybe 3 weeks, 4 weeks, but at least get that offer, get it secured, and then you can do your DD after that.
Really good advice,
so
especially in the market the way it is, as you mentioned, Kate. It's not a lot of supply out there at the moment, and a lot of demand, surprisingly, given the situation that the world finds itself in, that both from international clients and New Zealanders, we're having a bit of a land grab going on at the moment.
Yes, definitely.
And that's going to lead to a shortage of land. There are some developments, like Fraser mentioned, that will come on the market in the next 6 months to 12 months, but it'll take that long, and titles may not be available for 18 months. So I think it's really good advice that Fraser's given. Get your finger on the property, and then worry about how you're going to do all these things.
Correct.
During your condition period, anything else to add, Dan, from your perspective?
I think it's from a contract, it's probably the biggest thing we have is GST.
Yep.
So it's normally if you've got a short-term accommodation where you might have a GST element, that's normally the thing we look at. To be fair, most of those issues are probably more non-sections. Normally it's the existing properties that have a GST issue we really worry about. Most of the time when you get a title, it's usually inclusive from the property developer, so it's less of an issue. But it's just one little thing to be wary of, because sometimes it does come up, and as soon as you tell someone you're another 15% on top of the price they've paid, well, they're not going to get the GST claim. It's quite a lot of cash, so it's just,
definitely.
if you've got any short-term aspects, it's making sure you raise it during the process so you at least understand where you sit from a cash flow point of view of that GST.
So I suppose that leads us into our last question, really, is surrounding the build process timeline. This will be predominantly Fraser will be chatting with us here, but you've led into it great, Graham. There's a couple of types of contracts that are available to people looking at buying land and building here in Queenstown.
Correct.
So David, Fraser, that's probably a good place to start with us.
Yeah, so we use a contract called the Master Build contract, which is a standard procedure around New Zealand. There are other ones as well. The good thing about it, it's very much self-explanatory. You can read through it. It has all the points from payment schedules, timelines, It also gives you what has been included and what hasn't been included, which is needs to be very clear and understanding. Just little things like that there, and peace of mind then if there is an issue, which there is always going to be some sort of issue possibly down the track, and it's how to resolve that issue as well. So,
could you discuss with us a little bit about guarantees?
Sure.
Yep. What is common in New Zealand in terms of build guarantees?
So there is only a few companies that offer the guarantees. However, there could be some standalone companies that do offer a guarantee. Master Builders, which is the biggest federation of builders, all come together. They offer a 10-year master build. Now, I'll just quickly touch on that. I don't want to tangle too much with it, but there's really the 10-year is like a structural build on it. So if the house accidentally toppled over or sunk or something along those lines, then you've got insurances for that there, which is a really good thing to have. But then if there is little issues with the house, just say in 3 years or 5 years time that a door handle had to start to fall off, unfortunately the warranty doesn't cover the door handles because it's more likely someone's probably ripped it off, or it's just for whatever reason wear and tear on a house. But there is a defect period on a house is what we offer as well, so we do a 12-month defect period, so we come back and then, you know, if there's anything, screw pots, siliconing or any gaps or anything like that there, those little defects, and we come back through and we touch all them up so it looks like new again. So.
Cool, awesome.
I've had the pleasure of building with David Reid.
Oh, I didn't know that. Great.
And so I can tell you that in terms of our defects period, I think we had 3 very small items in that 12-month period. So,
I suppose from a finance perspective, going back to obviously, let's assume we're proceeding, we've secured the finance for the section, we would also have an approval for the build at that point in time.
Right.
Typically we've got 5-6 conditions which you'd be talking about the build contract. So we say to our clients, before you sign it, get it drafted, we need to present it to the bank, make sure they're comfortable with the contract. They're very familiar with Master Build and David Reid Homes, so generally you wouldn't expect any issues, but they do like to look at the payment schedule, going back to what you said. Might be 6-stage payments, but they want to make sure that the LVR, the loan to value ratio of the property, stays within the agreed value of what the contract is going to be signed at. So they can't have it going over 80% or over 70%, for example. Let's say the build loan is $1 million. You know, what interest are we paying when? So you're only paying the interest portion on the amount you draw down at that particular time. So obviously repayments increase as the stage payments come down. So you're not paying money to retain $1 million funding, you're only paying on what you draw down at that point in time. And we've always got to add on floating because we're always adding to that loan. When the build loan comes to the end, that's when we sit down and talk about loan structures and what your strategy is there. Look, you know, just touching on interest rates here in New Zealand because they're at an all-time low. You can get 1 year for 2.49 at the moment, 2 years for about 2.64, so the rates are very cheap. You probably, as a rough rule of thumb, for $100,000 what you borrow is probably $100 a week. Roughly.
All right, well thank you so much everyone for joining us today. I think the conversation's been really interesting, certainly some really valuable points, and all I think very positive signs at the moment in the Queenstown market considering the environment worldwide. It's exciting to see, and we hope it continues. And yeah, thanks so much for joining us everyone.